on how I, cool series, is, like I say, how I got to understand the euro and the British pound. So, tonight's agenda, first of all, of course, we'll do an introduction to the euro, followed by, so the British pound doesn't feel left out, an introduction to the British pound. We'll then discuss the fundamentals behind the euro and the British pound, and we'll then have a quick look at the euro-British pound pair. We'll then talk about correlations, which you can see correlate with both the euro and the British pound. Then, of course, we'll do our usual question and answer session. So any questions you may have, please hold off to the end of this webinar. Let's put myself on the camera so you can see me. Hello. Hello, everyone. Right. The euro, which is also known, of course, as the single currency. Now, originally it was launched on the 1st of January in 1999. God, it seems so long ago now, as electronic currency. It then became a cash currency, accepted as legal tender in 2002. So one of these, you see, one of those, as legal tender in 2002. The euro is, in fact, the legal currency in 19 EU countries and is actually used by over 340 million Europeans every day. Now, the fact of the matter is, at the end of it all 27 EU members will have to join the euro at some stage. So though at the moment you've only got 19 EU countries using it, the other 27 members will have to join the euro, with the exception of Denmark. Of course, obviously, the UK is leaving, so they don't have to use it. Now, according to the ECB, as of the 1st of January 2017, there is more than 1 trillion euros in circulation in the world. And the euro is one of the most heavily traded currencies in the market, and it is also the world's second biggest reserve currency. Now, recent history on the euro dollar, as you can see, this is my little line chart here, which I thought was a little bit prettier and a good way of sort of showing its sort of movements over the last sort of say, say 10 years, 15 years or so. So obviously, as you can see, it's had a fair few ups and downs since its introduction in 2002. It obviously rose on the back, like many currencies did, with the credit boom of 2007. But like many other currencies, it actually then collapsed greatly, quite quickly, with obviously the credit crisis, with the likes of obviously Lehman Brothers collapsing. It's had its fair bit of drama over the last 15 years, of course, with obviously the Greek crisis weighing heavy on it, then followed obviously by the Irish crisis, and in fact the crisis of the pig nations around that time. Remember the pig nations? It was obviously Portugal, Ireland, Greece, and obviously Spain. So obviously it's come under a lot of pressure during the credit crisis. It hasn't helped itself either. It's actually come under a lot of pressure because of the quantitative easing the ECB has put into place, the bond buying program, which again has weakened it over the years. And of course, we are seeing a fair bit of dollar strength over the last couple of years as well, certainly over the last, say, 2 years with tax cuts, etc. And that's weighed heavily on it. But it's had a few ups and downs. It's had a few ups as well. Obviously, more recently, one of the big bull run on the euro was caused by the French elections last year in May. Now, the sterling, or otherwise known as the British pound. Now, this is the official currency of course, the United Kingdom. It's one of the oldest currencies still in circulation, and in fact, it was used as payment as early as 775 AD. Despite the recent turmoil we've seen for the British pound over the last, certainly since 2016 in particular, it remains one of the most expensive currencies in the world. It is the 4th most traded currency in the world after the US dollar, the euro, and the Japanese yen, and it is the 3rd biggest reserve currency. Again, if we look over sort of recent history of the British pound, say over the last 15 years, etc. Obviously, it rose like many other currencies did, like the euro, like I said, with the credit boom of 2007, before, of course, being hit by the financial crisis of 2008. Then, of course, the biggest drama we've seen with the British pound, certainly over the last 2 years was when the UK voted to leave the European Union, and it did indeed suffer greatly. It actually hit the lows not seen since the 80s. Though, of course, over the last, since beginning of last year, the Bank of England had indeed raised interest rates twice. It has given it a bit of buoyancy, but at the moment, the pound in general is still greatly affected by the Brexit woes, and more of that we'll talk about in a little while. Now, the average daily trading range, as in the average daily pip movement on these two currencies, are as follows. The euro, on a daily average, moves about 78 pips a session, whereas, obviously, the British pound, US dollar, moves around about 84 pips. This is on average. We're not talking about big economic releases or big news flashes. We're talking about the average sort of trading day. Now, the euro dollar, which is also known as to say, which is simply known as the euro. Now, the euro dollar, euro, is the nickname of the euro dollar pair. Now, it is the most traded currency pair in the world. It's the most liquid, okay? Which does actually make sense for two reasons. One, it's the two largest reserve currencies. And the US and Eurozone, of course, are also two of the biggest economic areas in the world. The EU itself is, at the moment, for the time being, the biggest economic area in the world, because obviously it includes the United Kingdom, but obviously that's now leaving, so yeah. But a Eurozone, what I'm talking about are the 19 nations, is one of the biggest economic areas in the world. Now, the USA is made up of 50 different states. I dare you to name all 50. There's a little Friends joke there. But economic data, despite all the states and their different attributes and their different things, the economic data represents the whole nation, the whole 50 states. Same as how the Eurozone, like I say, is made up of 19 different countries, but the data collected is for the whole region. However, Germany and France makes up for almost 50% of the bloc's gross domestic product. So, though we look at the economic data of the Eurozone in particular, developments in Germany and developments in France are very carefully watched because obviously they're the two biggest players in the Eurozone. Now, we're talking about the euro dollar pair. Now, there's some key economic indicators to always monitor when you're looking to trade this pair. Let's start off for the Eurozone. Obviously, it makes sense, European Central Bank base rate decisions, because interest rates, of course, as I've discussed in other episodes, greatly affect the value of that currency. As well as that, you have press conferences, statements. We all know hawkish and dovish tones can greatly affect, obviously, a direction of a currency as well. And obviously, EU gross domestic product. This is another thing, of course, the health of the general bloc is also heavily watched. CPI, of course, consumer price index, inflation, always greatly impacts the currency, so that's carefully watched. And obviously, unemployment numbers. Sorry, little thirsty. Unemployment numbers. The higher, obviously, the employment number, the more strain to the system. The smaller the unemployment number, growth of economic in the economic zone actually again benefits the currency. And like I say, because Germany and France, more Germany's economic information other than France. France is more political, but Germany's information, industrial production, because it's a very industrial nation, that's growing. Like I say, that's heavily watched and can impact obviously the Eurozone and the value of the euro, and obviously German ZOO report, which is like a consumer confidence, again, because Germany really is, like I say, the biggest player in the Eurozone. The USA, again, these are the indicators you need to watch when you're trading the euro-dollar pair. This includes the likes of, obviously, the Fed base rate decision. Interest rates, again, can affect the dollar's value, as we've seen over the last couple of years. Obviously, they're increasing interest rates quite rapidly now. FOMC minutes, of course, what they're discussing, monetary policies in the future. Press conferences, again, speeches, hawkish, dovish tones. That has a big impact on the dollar's value. And, of course, non-farm payroll, we all know about that. The employment number from the previous month, that can have a big impact on the market. US gross domestic product, of course, that makes sense. And, of course, US consumer price index as well. Again, it's inflation. Again, remember, when you're tackling inflation, higher inflation is, of course, indeed increasing interest rates. New home sales and retail sales is also carefully watched when it comes to the US dollar. Unlike the Eurozone or Europe in general, the US has a very big housing market where people buy houses. In Europe, they tend to rent a lot more. So obviously, new home sales and retail sales, because retail sales does drive the modern day economy, are both closely watched. So if these are obviously improving, it shows growth in the US, which can affect, of course, the value of the US dollar. Here's some examples. This is the US dollar daily. And as we can see here, US increased interest rates. This is on daily. I think this was round about, the last interest rate decision when they increased it to 2.25. As you can see, the euro dropped in value against the dollar, and that obviously impacted this pair quite dramatically. And then if you look at the euro dollar on the 30 minutes, this is the NFP. As you can see, the NFP is the last NFP, one just gone this month. NFP came in 134,000 versus 185,000 expected. And as you can see, we'll go back there, I went too quick. As you can see, obviously the euro then gained on that and moved up against the US dollar. Now, obviously the same US information, economic data needs to be watched when you're trading the British pound US dollar. But here's some of the key UK economic indicators which you need to watch to monitor the British pound. Like everything, base rate decisions, of course, but we also have obviously the Bank of England minutes, which is similar to the FOMC minutes, monetary policy, what they're thinking and how they can see happening in the future. UK GDP, gross domestic product, of course that makes sense. Then, of course, we have the likes of consumer price index, CPI. That's a major player at the moment because obviously the UK is suffering from high inflation due to the fact that the British pound has dropped dramatically against the euro, causing the price of goods to go up in a lot more expensive, etc. The claimant count, which is unemployment, how many people are claiming benefits? Not benefits, sorry, unemployment benefits. Bank of England inflation report, slightly different from the minutes. They discuss obviously inflation and other key economic situations of the UK. And UK retail sales, because like I say, the UK, again, does drive on people spending its money. It's a service-based economy, so it does require people using services and buying goods. Now, one of the other key things which comes into play with both the euro and the British pound, certainly over the last couple of years, is obviously politics. And we saw that obviously back in June 2016. We saw that in November 2016 with the US election. So, of course, this is a major driving factor with these currency pairs. Now, like I say, it makes sense why politics has effect on currency pairs because, a change in government policy or indeed even a change in government can affect monetary policy, which then affects, of course, the value of that connected currency. Elections or statements are now closely watched by traders. Here's some examples. This is the euro dollar on the weekly. This is a weekly chart. And back in around about May or last year, 2017, it was quite a nervous year for the Eurozone because there was a number of elections. There was a Dutch election, the German election near the end of the year, and the French election. And as you might have known or might remember, it was between Macron and Le Pen. Now, Le Pen was very radical. She wanted to leave the Eurozone and bring France out of the EU, similar to what the Brexit was. So there was a little bit of fear that she might get in, which was weakening obviously, or weighing heavy on the euro. Of course, back in May, it wasn't the case. Macron won the election. He's pro-European, he's pro-EU, pro-Eurozone. And as you can see on the back of that, the euro went on quite a hefty bull run because obviously the fears of maybe France leaving and indeed the bloc breaking up diminished. So that's, again, an example of how politics can greatly affect the value of that currency. And it's easy to see, very much so, with the British pound, of course, with all the drama of, the Brexit, etc. Now, this is daily. Okay, we saw this first of all back in July when he had a lot of political upheaval. Certainly with the Brexit negotiations, you had the head negotiator David Davis leave, and then Boris Johnson leave, the foreign secretary leave, and as you can see, the British pound came under an awful lot of pressure. Again, political though, when there was rumors or hints made by Germany back in September that they were close to maybe making a brick exit deal, the British pound then benefited and it traded higher. Now, we're talking about the euro, we're talking about the British pound. Let's have a quick look at the euro British pound. This is on a weekly. Again, this is really driven an awful lot at the moment by obviously the stuff that's happening with the brick exit. And as you can see, it rose, it skyrocketed on the back of the UK vote to leave the EU, and it's continued to quite on a bullish trajectory. But you can see little rumors, again, talking about the Germany, and their hint about maybe the deal being close impacted and made the pound sterling stronger against the euro. So this is an interesting pair to watch, especially with more and more developments about the brick exit. Currency pair correlations. Again, this is something you need to be aware of when, of course, you're looking to trade the euro, dollar, or the British dollar, you know, the cable. Now, there's two types of correlations. The positive, which means it tends to sometimes go in the same direction as that currency, and of course the negative, which goes in the opposite. Now, the positive, believe it or not, the euro dollar and the British pound tend to move in the same direction on the back of US data. Okay, so they tend to move quite in the, they sort of correlate. Of course, there's another reason for that, is the dollar is a safe haven. So when the market is, bullish or optimistic, people move their money out of safe havens like the dollar into riskier assets like the euro and the British pound. So that's why they tend to correlate a lot. The dollar USD and the Kiwi USD, they tend to correlate in a positive fashion. The Aussie dollar US dollar as well, and the British pound US dollar, they tend to coordinate quite well. Aussie dollar US dollar and euro US dollar, they tend to correlate quite well in a positive way. On a negative, it means it moves in an opposite direction. You have the likes of the US dollar, Swiss franc. That's a quite interesting negative correlation, because some traders sometimes look at that and maybe try to do a hedge trade, as in if they go long on the dollar, the euro dollar, and they go obviously long on the dollar Swiss franc, with the idea that if euro is obviously losing, then the dollar Swiss franc should move the opposite direction. That's the theory. Doesn't always work, of course, because otherwise we'll all be multi-millionaires. Other negative correlations include the British pound US dollar and US dollar Japanese yen. They're a negative correlation. The British pound US dollar and the US dollar Swiss franc, similar to the euro dollar and the dollar Swiss franc, negative correlation there. And of course, you've got the Aussie dollar, US dollar, and the US dollar and Canadian dollar. Now, there's another correlation which I'd like to quickly brief talk about, and this is the euro dollar versus the US dollar Japanese yen, because they tend to again move in the same direction. But this again, it depends on your attitude to risk. You tend to see sometimes the pip movements on the euro yen is a lot more extravagant, or a lot more violent than the euro US dollar. And I mean, here's an example here. When you had the euro on the dollar on a bullish run, you saw the same direction with the euro yen, and obviously when you saw the euro dollar sell off, you saw the same sort of direction with the euro Japanese yen. But as you can see here, obviously this movement seems to be a lot more violent than this movement here, so it does tend to move a lot quicker and a lot more volatile than the euro dollar. That's the euro yen I'm talking about.